This is Scott Whitwam with your morning real estate investor update. And today's top story, only 1 week away from sweeping changes coming across the nation to the real estate market. Many states have already implemented many of these changes throughout their real estate associations, covering both residential and commercial markets. These changes don't only affect how residential transactions take place, but investors who involve a licensed agent on acquisitions or dispositions of a transaction may be surprised at the number of new disclosures and preemptive representation agreements required to comply with the terms of the settlement. These changes affecting compensation and disclosure must be in place by August 17th to officially fall under the safe harbor of the National Association of Realtors Agreement. Investors can look at this as another bump in the road and increased regulation, or an opportunity to reduce cost over time. It'd be a good idea to do some research and see how the investing business may be affected by these changes in your particular state. Today's mortgage rate update. There appears to be some good news for investors when it comes to mortgage interest rates. For us deeply tied to real estate investing, we can use some good news about right now to help move some of the aging inventory. According to Freddie Mac, mortgage rates sank last week to their lowest level in over a year. With an economy that remains on the brink of an official recession following the last unfavorable unemployment report and continued financial market turbulence, the pullback in homeowner rates does increase the likelihood that buyers will gain some purchasing power, which will lead to an increase in home shopping again. This drop in interest rate has already started to be seen in some of the refinance activity of existing homeowners who see this as an opportunity. The average rates on a 30-year fixed mortgage dropped to 6.47% by the end of last week, and the 15-year ended at 5.63% according to Freddie Mac. In today's wrap-up, there is evidence that buyers have started to return to the real estate market. My question is, will we begin to see iBuyers get more aggressive in their acquisition in shares of the market? With pent-up buyer demand, the modest decrease in interest rates in the last few weeks and the drop in stock prices may be enough to move some of the larger players back into this space as they look for a safe harbor to shore up some returns. For the investor, I think we can see this as being at a fulcrum point. If inflation remains high and unemployment grows, we may see some full-on recession discussions and a pullback in housing prices. This generally means buying opportunities. If this weren't an election year, I would be more confident in sound Federal Reserve action, but it is, and I'm not. Be sure to subscribe to the Morning Real Estate Investor Update and catch me on the weekly Whitwam Wealth Real Estate Podcast.